Hi guys, welcome back to Day Trade Diary. Today is Tuesday, the 9th of June, 2026. I'll give an update about what happened yesterday in the past 24 hours. Of course, this is for the 8th of June, day number 102 of our documented trading journey. For Oanda CFDs, we're at 15,057 US dollars at 59% exposure. And for Binance, we're at $9,287 with an 87% exposure. And what I mean by 87% here is, if you can see, here's our Binance screen. The total exposure we have in Bitcoin currently is 8,085, and our net asset value is over here. So it's simply a percentage of our exposure over our net asset value. The moment this goes over 100% means you are more than one time leverage, and there is a risk of being liquidated depending on how much leverage you deploy. But if your leverage is less than one or less than 100%, then you will never be liquidated, even if the Bitcoin price goes down to $1, for instance. So as a rule, we try to keep it within a reasonable range, and what that means can change over time. But I never go over 150% leverage, so 1.5x of the total net asset value. There is still a risk of being liquidated, but small. But there's always still that risk, so we must be conscious about that. Good. Our overall return is total net asset value is 24,343 US dollars, which is a return of 3.46% over 102 days, and that is $814 in the green. As for updates, for the last 24 hours, I think this is one of the few times where we had zero activity whatsoever in terms of buys and sells for across all assets, all CFDs, and even Bitcoin has no activity. I can show you in the chart what that looks like. So since our last update around this candle, Bitcoin has been in a very tight range, bouncing between 64 and 62,000. Hasn't hit any take profit or even a buy order. So we will observe what is going on with that. Seems like the market is on pause at the moment. It's a bit undecided whether to rebound or to take the next dip down. But perhaps that will be clearer once we look at the broader market in terms of the S&P 500 and so on. Let's look at the S&P 500 first. So you can see it's rebounding a bit again. S&P 500 is super resilient. It has faked out this dump many times. So you can see here all these dumps. For example, from the 6,000 level all the way down to the 5,000 level. People thought that was it. Yeah, that's it. That's the big dump. And then another one here from 7,000 to 6,400 maybe, that people thought, yep, that was it as well. And now as well, another fake out. But could this be the real big dump now? Who knows? This is so unpredictable now. You can see here even clearer on the weekly chart all the mini dumps of the S&P 500. Every time people thought, yep, this is it. This is it. Look, you have these sharp drawdowns and immediate pullback, like it's unbelievable. So, but of course, this was the COVID dump, and after the initial overreaction and then the announcements of the support from the governments on basically money printing, the market has been in a tremendous bull market from 2020 all the way to 2022, and took a bit of a breather there, and then it's been up only boom since then. It's really incredible. Okay, so that was S&P 500. Let's take a look at our main squeeze, which is silver. You can see on the weekly chart what it looks like. It does look kind of bearish. If support doesn't hold here, then we are going lower, back down to the 50s. That's okay. We will continue to accumulate and wait for the inevitable rebound in silver. Maybe I should put it on daily chart. Yeah, that's what the daily chart looks like. Certainly looks like it's going to roll over. Similarly, gold as well doesn't look too strong at the moment. I could have sworn I had a buy order at 4,300. Perhaps that expired. But 4,100 is good as well. Okay, let's look at bonds. Certainly looks like the downtrend is continuing. We had a nice run though this fall. Should have taken profits, but it was so small that I didn't bother. I just held it. Get some exposure in the market. Oil. What's happening with oil? Okay, it's finally dipping. Copper. Copper is pretty steady. Yeah, it's down and then it's up again in the last 2 days. That's good. S&P we already covered, and gold and silver we already covered. Yeah, so that was pretty much the update. Just want to show you the equity curve based on our largest assets comparatively to our largest assets. Of course, blue is our overall performance of this trading strategy. Orange is Bitcoin, and silver is silver. Silver has done really poorly since we started on when did we start? February 22nd. It's down 21%. From it's currently at 68. We started at 86. So silver has done pretty badly. Bitcoin has done pretty badly as well. It's down almost 5% since we started in February 22nd of February. So it's down almost 5%. We started at the price of 66,000 and now it's at 63,000. So it's gone through a bit of a ride, yeah, Bitcoin. Yeah, so if we these are our two main trading assets, Bitcoin and silver. So if we take the average of it, it's down minus 13%. However, we are up 3.46%. There you go. Let me just get rid of these colors. So you can see here we are up 3.46% as depicted here by this blue line as compared to silver and Bitcoin. So this proves that the trading strategy does work. We are beating the index, so to speak, if our index is a amalgamation of silver and Bitcoin. So we can't be too disappointed about our performance. I know it's a bit underwhelming to say that, yeah, we only did a 3.46% return over 100 days. So if you annualize it, it's probably like I don't know, like 11 or 12%. But seeing that the broader market in Bitcoin and silver are doing poorly, I think this is a very, very good result indeed. All right, so that concludes my update for today, and I wish you all a pleasant day ahead. It's beautiful weather here. I'm going to enjoy the sun now. Take care. Bye bye.